That is shocking to me. That's shocking to me. All right. Hello, Andrew. Thank you so much for meeting with me. Thank you for being on our tax advisory council. And I am excited to hear from you. And I'm excited to just let me have it. Tell us why you are excited about the Bookkeeping Accelerator. What is it that you're seeing that you realize that this is going to be such a great thing for accountants and tax preparers? And maybe we should say a little bit, you're a CPA, right? You worked for KPMG, right? So what kinds of problems are you seeing that, what kind of issues are you seeing that bookkeepers tend to make that make your job harder? If you could, what are the dominoes? If we could just do this one, just do this one or two things, that it would clear up. Do you ever play that game Minesweeper? I used to love Minesweeper. You'd click one little box and it would just go, that was my favorite part. What are the boxes that we can check that would just open up? It would just oh my gosh, that would clear up so much stuff.
The balance sheet is probably the first domino. If I'm going basic, not getting the knowledge up to the level of tax-ready books, but I'm just laying the foundational understanding, your first domino is the balance sheet shows where all the skeletons are hidden.
Okay, that's awesome. So the balance sheet, tell me about the skeletons in the balance sheet. I want to know, give me the dirt. What kinds of skeletons? What are we talking about here? What are we looking for?
The very first thing I look at, let's say I go into a QuickBooks file. I'm checking in, did they reconcile the accounts and when was it last reconciled through?
Okay. Every bookkeeper is going to do that.
No, they do not.
Oh, really? Okay.
No, it's that's why we have cleanup. Right? Okay. That's why cleanup exists, is because even though you have a bookkeeper, how good and how fast are they?
Right.
How up to date are they?
Right.
So
but every bookkeeper is going to reconcile the bank accounts. I mean, when we're cleaning up books that haven't been reconciled, it's typically because they didn't have a bookkeeper, because the owner was doing it themselves. They didn't think that reconciling was important. So every bookkeeper is going to reconcile the bank accounts. I think that's pretty obvious. But I think what you're talking about is reconciling the non-bank accounts. Is that right?
It's both. Okay. Any accountant is going to look in and see how up to date is the balance sheet.
Okay.
So if I go in and I look and say, when was the last date this account was reconciled, the bank account, the credit card, that's the starting point.
Yeah.
If it's not reconciled, I know I don't trust the P&L and the financials yet.
Right.
Meaning, if it's not reconciled, I have no confidence that it is captured everything that should be in the system.
Right.
So you would say, oh yeah, all the bookkeepers do this. No, that's why the CPAs call foul all the time, is you didn't do this. This is basic. So now the first question, I have to go and say, okay, who's going to do that?
Really? All the time you're telling me that you're getting books from bookkeepers who did not reconcile the accounts. Talking bank accounts were not reconciled.
Which is why me and my team have to go and do it.
Really?
Yes.
That's me. That is shocking to me. That's shocking to me, because when I think of a bookkeeper, I think of the two main things that they're doing is they're categorizing the expenses and they're reconciling the accounts. That's it. So that's the base level.
I just kind of start working down almost a checklist of, hey, was this done? And that's why QBO is set up as a books review to make that information really easy and accessible to somebody to go and check, hey, was this done? And if it doesn't, then I instantly say, okay, my confidence in taking whatever number you're giving me drop. I can't tell you how many books we spend a lot of time cleaning up because, okay, I'll give you one. A $8 million company, they have got the tax returns done over the last 2 years by taking the bank activity and booking just the high level transactions. So for instance, payroll went out, but through the payroll processor. Instead of having any detail of whose payroll went out, it was just, well, $20,000 a week went out of my bank account. Boom, reconciled. But there's literally no detail behind that other than that was for payroll. Well, if I want, or the credit card was paid, there's no detail behind the credit card and all the transactions. There's
and what the transactions were for? You're saying that there was no detail as to what the credit card was used to pay for.
Exactly. It is just, okay, I spent $5,000 on the credit card this month, and there was a $5,000 transaction to the credit card company. So in theory, it's reconciled. But when I look at the detail, I'm like, and I run the P&L, there's literally no transaction data other than I paid my thing, and you're just like, okay, cool. Like it was done, but nowhere to the level like a CPA can't do. How do you file a tax return when you're supposed to only do 50% of meals, and I have no transactional data to know how much meals were done? So they basically export all the transaction detail, do their own quick filter, say, okay, I think these are our meals, or they try to throw a number up there to give it done. I'd be curious what they do.
Yeah.
Right.
So
but
you're saying that a bookkeeper did this.
Yes.
It wasn't just the business owner. It was a bookkeeper did this.
Yep.
Wow.
So you can see how accountants are like.
I can see how the trust, like I can see why there would be a level of distrust among accountants and CPAs of the bookkeepers. I mean, if they're not even reconciling, which I am seeing as a huge basic, like a basic thing that they're supposed to be doing, if they're not even doing that, and they're not breaking out the expenses, like they're just saying, oh, you spent $5,000, but you're not saying what you spent it on. Holy cow. Yeah, that's bad.
Yeah, and it's not everyone, but I see enough that I'm like, okay, there's glaring gaps. That have or could have been addressed. Last week, I spoke to somebody who's been the bookkeeper for probably at least 15 years for this company. The owner loves her. The owner has bought her a car and pays for the car through the business.
What?
And I'll give you an example. Cost of goods sold has one account. Every single thing she does that might be allocated cost of goods sold goes into cost of goods sold. Well, they have 3 or 4 different service lines. They go and install software. They support. They install software, consult on it. They install hardware. It's IT. They manage IT for medical companies. Then they do support. And then they do consulting. So if a business, and this is where she doesn't know what she doesn't know. The bookkeeper is like, she's like, I thought I was doing a good job. I'm like, you're doing your job.
Right.
But if the business owner ever asks this question, how am I doing? How much are my margins on my hardware? Revenue and sales. What are the costs there? You can't give them that information. And the funny thing is, you're already doing all this stuff to go through and identify what is cost of goods sold or not.
Sure.
And yet, without knowing it, you have no insight into that could be available with just a little more guidance. Right? This is more of a management thing, like a CPA for a tax return. they might not care about the detail.
Mm-hmm.
Like cost of goods sold works for a tax return. It is the
Yeah.
one line that shows up on there for that, and they can throw it on there and they can move
Yeah.
on.
Yeah.
And so a domino that could be there, but I don't know how you deliver this one, is, and this comes back to the doing good or knowing what good looks like, is understanding who the users are and what information they're trying to get from the financials.
Oh, yeah. Yeah.
Okay. So there's two aspects to this. The main user of the financial statements is the IRS
Yep.
in small business.
Yep.
So if the bookkeeper understands what is the information that a CPA is looking for to be able to comply with the IRS,
Yeah.
that's huge. That's the checklist that you're potentially looking through. How do I map the books to a tax return, a 1040, an 1120, whatever I'm doing? How do I map those? Because then that gives me this user, the IRS, wants this, and a CPA who's going to be populating that would love this populated.
Yeah.
Right? So that is there. That second piece, the second user, is the business owner. And if you even just have some of these high level questions of like, what do you wish you knew?
Yeah.
What do you wish, what information, what questions do you want answered from your accounting? What that question leads to is, let me now customize the chart of accounts to meet the needs of the business owner. So this might be a pet peeve of mine. If I open a QuickBooks file and they have not customized the chart of accounts, I don't trust it very much. It's a good signal that shows that this business is not serious about their accounting and doesn't care. Because they have not asked any questions of their bookkeeper or their accountant to get insight out of their accounting.
Yeah.
I'm just, okay, plug it in there, do whatever you need to, and it's good.
Yeah.
And it's like, okay, that is level one of like baseline, just comply.
Yeah.
And I'm playing to try to be one like level up of like, I want you to be a few levels up that says you're proactive, you're getting this information regularly, and it's giving you the insight you want to be able to do it. To me, those are answers and insights that people actually care about, but they settle for something that they don't know they can get.
Oh, absolutely.
They settle for what they're delivered and offered because they don't know how to go get it otherwise.
Well, one, they don't know how to go get it. And two, they're busy running their business. You know, if I'm a plumber, I'm more interested in landing plumbing clients and delivering plumbing than I am, you know, looking at the books and looking at my numbers and, you know, running reports, you know?
Right. So it sounds like this is maybe like if we can start imbuing that at level one of like provide some insight, provide some reports, provide some commentary, even if it's very basic level.
Yeah.
Like you're starting to add value in a way that your peers are not.
Yeah, exactly.
And then we could get through tax ready books, and then we could go to the third level at some point when we train on. Now you want to go even farther? Here's some cool advisory stuff you could do.
Well, if the bookkeeper just knew, like you said, to ask the business owner, what answers do you wish you knew about your business? Like just that question like sets you apart, because then you as the bookkeeper can just keep that, even if you don't know when you're starting out like how to make that happen. Like that's a thing that's in your brain, so that like as you're working with them, you can say, okay, well, how do I set this up? What do I need to learn? Like what reports do I need to track or whatever, so that
where's the
business
coming
owner
from?
so that the business owner can get that, even if it's not, right in the beginning of us working with them. Like that's hugely valuable just to know to ask that question.
Right.
So
yeah. So do you see how like there's a simple trigger or red flag that if nothing has been customized, no one has been asking that question.
Yes.
Some similar question.
Yeah.
Out of the box. Okay, we're doing the basics just to comply.
Yeah.
And you're like, oh, opportunity. And it's like, I cannot tell you how many times I have had conversations with business owners where we just, hey, has anybody walked through your financials? And we walk through them and they say, I had no idea.
Yeah.
Constantly, like all the time.
Well, I'm embarrassed to admit that I was one of those bookkeepers. Like
Sure.
I did the work and I didn't know that it was my job to walk my clients through what I was seeing. Like I just expected, I did the work and I passed off the reports. I'm like, okay, here's your reports. And I just expected that the business owner knew how to read the reports. Like I didn't ever sit down with them and go through it line by line and talk about, where these numbers came from or, what I'm seeing. Like I never had that conversation. I never knew that it was part of the bookkeeper job. Like
okay. So watch.
Yeah.
Watch the difference. The CPA knows that because they have to have those conversations all the time.
Yes.
And if you're having them proactively before it gets to the CPA, your value just jumped.
Yeah. Yeah. Awesome.
Right? Like that is how you become a friend. Because what the CPA is facing is I now have to pick this up and solve this in March. And I've got deadlines. And then I'm calling the client or I'm calling you, this bookkeeper, because the job wasn't done.
Yeah.
There's lots of questions and there's lots of gaps.
Yeah.
If you have proactively cleaned up a lot of those gaps, had those questions, and bring it to me in a condition that I'm like, this is better than anybody else is bringing me anything.
Yeah.
Oh, now I can get to work. That's another way you're going to make I'm going to love you because, oh, can you do this for the 5 other clients who suck at getting me good information? Oh, you'll go, and whether you want to use this phrase or not, you'll go bird dog these issues and solve them for me. You're my hero.
Yeah.
And what is that you're bird dogging? It is I'm proactively going down and reviewing the balance sheet and the P&L. So there is probably a year-end review that somebody can do with a client that would be awesome. And an accountant is like, really? Okay. Wow, you have this? This is great. Like they don't ask questions when it's organized and it's given to them. Then, and that's also a good or a bad thing. They don't ask questions when it's disorganized and given to them as well.
Yeah.
And so who misses out? It's really the business owner who misses out.
Interesting. Yeah.
The more we can help, that's the domino. If your knowledge as a bookkeeper is high enough that you can identify things and proactively address, you're actually bringing value to the client today.
Yeah. Yeah.
This is a side note. If we can train a bookkeeper to start quantifying their value, they will be more successful out of the gate and long term.
Yeah.
Hey, by working with this, we identified these 5 different errors that were happening. If I had a proactive bookkeeper who was bird dogging and chasing these things and going to figure it out, I'm like, okay, all of a sudden, that's the culture and the type of person that a CPA, an accountant, any bookkeeping manager would love that person.
Yeah.
So that's the type of culture that we want. So there's a fear that that somehow that I'll get something wrong, which is justified when you're new at anything.
Yeah.
But almost do you also know that you can fix and you can figure out?
Yeah. Yeah.
I don't know that there's that confidence is there for a lot of bookkeepers. And part of it comes from experience in doing and seeing enough.
Yeah.
I really hope we can imbue that confidence by the way you train does give that confidence, I think. And so if we can speed that process up to get them to that confidence and get them to try and test and play around with, and you're giving them in the software to play around, which jumps it as well. Okay. I've hit a few different topics and things.
Yeah.
What else do you want? What else?
This has been great, Andrew. Thank you so much for taking the time, for thinking this through, for venting, for sharing real life examples. Like this is exactly what it is about to be on the council. And, we're just taking that information. We're like squeezing it out of your brain so that we can, you several times, you talked about the gap. And so we are just trying to squeeze it out of your brain and put it into the course so that the graduates of this course can be ahead of the game. And
so here's probably a simple way to summarize it, because we started down the balance sheet. We got stopped. We didn't even make it the balance sheet, right? Because I'm hitting other topics and other things.
Right.
If you are getting us all the bookkeeping transactions from the bank feeds and the credit cards and whatever other income sources and accounts they've got, you grab all those. You probably get us 85 to 95% of the way there.
Mm-hmm.
But I would say those are all balance sheet, bank account, and credit card accounts.
Yeah.
Okay? Now, so if you teach them to focus on the balance sheet, and this comes down to the accounting equation as well, right?
Yeah.
If I have assets equals liabilities plus owner's equity, I get that right, everything falls out. Well, if I take equity as a revenue increases equity and expenses decrease equity, then if I'm doing the bulk of the work on that one, then I get that one right, then it flows up, and then I just have to, I've already got if I get the balances right, I'm there. The second thing, loans. If I get the loans right?
Yeah.
If I get principal balance in the loans and interest right, then confidence from an accountant jumps. Oh, somebody who knows what they're doing is in here and looking at it.
Yeah.
Great. All right. The next one, fixed assets. Have they been updated? Did they give me a list of what was added and what was taken away this year? Bookkeepers, it'd be a bonus if they tell me what was depreciated. But like usually tax depreciation in books can be very different. So most bookkeepers never even touch it and don't even look at it.
Yeah.
At the end of the day, having communication between the bookkeeper and the CPA once a tax return is done to true it up so that what I booked last year, if there are adjustments for taxes, that those can get entered in.
Yeah.
That I'm curious to see what the tax advisory council says on that. My beginning balances are never what I left them off as. How many times have they changed?
Really?
And then how do they solve that?
Yeah.
Because what I booked last year for the tax return no longer matches what I should have started this year out with.
Wow.
Well, the number one reason is because you as the CPA never communicated it to anybody else who was on the bookkeeping team to do anything. First, you don't believe they know what they're doing, so you didn't tell them. And second, they're not proactive enough to come back and ask you to get it updated.
Yeah.
So that's the tax ready books of a wrap up, not even ready. It's once it's finished, let's close
Heading
the gap.
It back. Yeah. Yeah. That's a good point.
So if I'm getting all my loans done, I'm getting my fixed assets done, I'm getting my other accounts receivable and other asset balance sheets done, do you know how to reconcile the balance sheet? To me, that is if the skeletons show up there, if you know how to reconcile a balance sheet and you have supporting schedules to support how you got to different numbers and why you have those numbers on there, a lot of it would be the loan statement.
Yeah.
So the ending balance is $102,000. Well, if in the books it shows it's $89,000, we know you didn't book any interest during the year. You booked it all to principal like that. So if you have the support and you can reconcile and you get it to 102 and you can give me that statement, my confidence jumped. and
Yeah.
you do that again and again and again, I'm
Yeah.
like, sweet. But when it's a mess and I don't even touch it because I don't know how,
Mm,
that's the confidence and the knowledge gap that says, you let me teach you to reconcile the balance sheet.
yeah.
And then the confidence that you get from a CPA jumps, as
Yeah.
well as the deliverable to them jumps,
Yeah.
then like you're going to win.
Yeah.
You go into these conversations, you deliver it to the books to somebody, and you're like, I have this. And so if I didn't do that, skeleton, skeleton, skeleton,
Uh-huh.
right? Like if my loan balance is off from what the year-end statement says, that's a
Mm-hmm.
skeleton.
Mm-hmm.
So when I know what good looks like,
Mm-hmm.
I'm confident. My confidence goes up. And when I know what good looks like and it doesn't meet that expectation, my
Yeah.
confidence drops.
Yeah.
And so your ability to deliver, here's a simple way to phrase it as well. Your ability to deliver your product of books, what's your output, will show you the quality of bookkeeper that you actually are.
Well, that's a great place to end it. So thanks again, Andrew. This has been awesome and enlightening, and I'm so excited about what we are going to be teaching these bookkeepers and how they can level up and be the CPA's best friend and be that person who they can, that the CPA, the accountant can trust. Just by looking at the books, it sounds like they'll know that you're amazing.
Right? So if you want one domino, that's probably the domino, is get the balance sheet right.
Yeah. Yep. Awesome. Well, thanks so much for your time, and you have a great week. We'll talk to you soon.